We invite K.N. Vaidyanathan, Senior Geoeconomics Fellow of Gateway House and Chief Risk Officer of Mahindra & Mahindra and former Executive Director of SEBI, to moderate the session. Gretchen Morganson, Pulitzer Prize-winning reporter for the New York Times and author of Reckless Endangerment. Monica Bhatia, Center for Tax and Policy, OECD Paris. P.N. Vijay, National Spokesperson and Economic Cell, BJP. And V. Ananthan Nageswaran, Avishkar Ventures, an affiliated faculty member of Singapore Management University.
Greetings and good afternoon. Do I get an echo back? Okay. One of the good points about coming to events like these is everything that you cherished as truth get proven wrong. So Manjeet told me everybody has become health conscious, diet conscious, but the longest queue for food was at the dessert counter. So therefore, there are two new rules being added. So in the morning, you were told to keep your phones on silent. Since this is post-lunch, keep your sleep as well on silent mode. The second rule is I'm going to turn the tables, so it's not going to be moderator envoys taking questions from you for us. It is going to be moderator envoys taking questions from us to you. So this is going to be the classic Harvard Business School, IIM Ahmedabad style of cold calling on the audience. That's the surest way to ensure that I have your full attention and concentration. Are you game for these two rules? No, not just the front benchers. Are you game, sir? Can the camera focus on you? I'm kidding. Okay. About 10.5 months ago, April 3rd or April 4th, depending on the part of the world you live in, the morning newspaper reading had a change of habit. So instead of reading the Times, people read Panama Papers. A great story broke out, revealing the soft underbelly of globalization. And what it talked about are thousands of celebrities who have used offshore structures and companies to exploit 21 tax havens around the world to stash wealth. It also exposed the soft underbelly of the offshore finance industry. Use, misuse, and abuse of global taxation came front and center to the discussions. OECD, which is represented here by Monica Bhatia, estimates that the extent of tax evasion on corporate taxes is between 4 to 10% of countries' incomes, which ranges between $100 to $250 billion. Oxfam estimates that the amount of money stashed in tax havens is of the order of 18 trillion, and they quickly say they are very conservative. The Tax Justice Network goes a step further and puts its own estimate at somewhere between 21 to 32 trillion dollars of money kept in tax havens. So this is really an issue that needs focus and attention on a platform like the one that Gateway House has created. Closer home, we had this great case study of the Vodafone tax case. The question was about transfer of an underlying asset in India. But through careful statecraft, the goalpost got shifted because of a retrospective assessment change in the tax rules, and therefore the question was no more on the structure or the violation of the spirit of tax laws. It came on the form of tax laws and whether it is proper for a sovereign to make retrospective amendments to tax laws, and that became the goalpost discussion. This was then used by investors around the world to say, you know, we are uncertain about the tax regime in India, and therefore we are shying away from making investment commitments to India. More recently, the government, represented by Mr. P.N. Vijay, not the government, I stand corrected, the banker turned politician, representing the Bharatiya Janata Party here, they brought in, through their government, this entire chase against black money and brought in a new law. So this discussion is important to happen in an open platform like the one Gateway House has created for this important Gateway of India Geoeconomics Dialogue 2017. And along with Monica and P.N. Vijay, on our panel is an erudite economist from Singapore, Dr. Anantha Nageshwaran. He's my batchmate from IIM Ahmedabad, but please don't hold that against him. And a critique and columnist from the New York Times, Gretchen Morgensen. I don't know how many of you have read her book, Reckless Endangerment. If you haven't, don't leave now, but after an hour and 15 minutes, go and buy that book and read all about it. Okay, so we have a beautiful combination. We have a technical expert on the subject coming from the OECD, more specifically what is called the BEPS project, Base Erosion and Profit Sharing, which hopefully you will explain what that is. We have an economist, Anantha Nageshwaran. We have a critic columnist, and we have a politician. You couldn't ask for a better post-lunch panel. The way the panel is going to work is I'm going to go around with each of them making their opening remarks on specific questions, after which I have a few questions to ask them. Then I have a few questions to ask you. Everybody has gone to sleep. Your turn to ask us questions. Let me start with you, Anand, if I may, as the wise economist. People say investment decisions have to be taken on fundamentals. You heard the previous panel wax eloquent about the fact that there is no geopolitics in sovereign funds and that they take on cold investment numbers. They never mentioned about taxation. But you and I know that all investment decisions are tax-driven. How has this come to this stage? What are the contours of the problem that we need to address? You have about 5 minutes or so.
So you will stop me, right? Good afternoon, ladies and gentlemen, and thank you, Gateway House, for having me here. I think the fact is, today we are having this session and discussing it in the open. It is a very big sign of progress. I don't want to sound cynical, because if you ask this question in 2011, what all the world should be doing to ensure fair taxation, you would have said we should limit the scope of the abuse of tax havens. We should identify and sanction transfer mispricing. You would have said that international accounting standards should be reformed, and you would have said that there should be a mechanism and even legal framework to recover stolen assets located overseas, and you would have said that there should be information sharing between countries, and large transnational corporations must give more information in their final accounts, financial statements, about the location of their sales or profits. You would have mentioned these things as a wish list in 2011, and today in 2017, February, as we discuss this, much of these initiatives have actually borne fruit. If not to the fullest extent, it is fair to call them very advanced work in progress rather than stillborn. So in that sense, I think this is a topic that has progressed well. And now we are getting into a situation where political economy considerations, geopolitical power balances, etc., are coming into the frame, but that's okay, that is par for the course. Most issues would run into these problems. Whether, for example, European Union nations make a discrimination between EU nations facilitating tax avoidance and tax evasion or tax planning versus non-EU nations, and is there a different standard for judging one and not the other? And also whether the OECD and G20 are the most appropriate forums to discuss this. Should there be another body which represents all nations? Because the famous statement that if you are not at the table, then you are on the menu becomes a live issue for many smaller nations. So I think we are now coming to grips with these kinds of issues. So in that sense, I think the fact is, of course, developed nations today are having a challenge meeting their fiscal numbers, their unfunded and underfunded obligations, which are below the line. And emerging economies are battling with a constantly low tax share of GDP, and very few tax assessees, etc. Of course, part of the problem lies in their home turf as well. We will talk about that later, I suppose. But right now, I would say, A, we have made considerable progress. B, the issue is accepted. And C, the case that you mentioned at the beginning of your opening remarks about the Vodafone issue with respect to India has in fact galvanized many other countries, principally China, for example, to come up with their own legislation that forestalls such a possibility. I think it's not that India made a big blunder by subjecting Vodafone to this tax, but the retrospective nature of it made it controversial. But the anti-avoidance and also this whole question of where the source of the assets is located is now accepted as a fair basis for taxation. So in that sense, I think we have made considerable progress, but the issues that the world is now grappling with are the issues that have bedeviled institutions like the IMF and the World Bank, etc., whether there's a level playing field between nations, etc., and that is where we are. And separately, there is an issue of reforming, simplifying, and making tax systems fair, transparent, and reasonable within the local economies of many developing countries, which will also make a good contribution to addressing this problem. But that's a separate issue.
Great. So if I can then move to Monica. Tell us about how OECD G20 came to seize this subject, and what is the scope of the study that you're leading on the BEPS project, and what are some of the contours of your recommendations?
Okay, well, thank you very much, and thanks to Gateway of India for having me here. It's a pleasure to be here. And I just, you started this discussion talking about the Panama Papers and how the Panama Papers has brought the topic of tax, I think it's brought the topic of tax into the living rooms of people, of the common man, of the ordinary man, whereas it was considered to be a technical, very hyper-technical topic and talked about by technical experts like me and not really by everyone. But this issue has been brought into the boardrooms, I think, of corporates. It's come to the living rooms. The man on the street, even the taxi driver knows about it and talks about these tax issues. And the whole unfairness of the system where a few multinational corporations can exploit the deficiencies in the international rules to park profits wherever they want to park profits, whether by using the transfer pricing rules or the residency rules, and the unfairness of it all. There's a lot of talk about unfairness. Similarly, there's a question of the global elite being able to put their money or hide their money in secrecy jurisdictions, and that begs the question from other people, like, why am I paying for government services? Why am I paying the taxes which the government needs? So the unfairness or the balance of, or the burden of tax on those that are complying with the or playing by the rules. So this has come to much more light, and we are talking about it today. But I think if we kind of rewind a little bit back 4 or 5 years ago, when we came to the financial crisis of 2008, I think that was a time when this issue came home to the big economies, whether it was the G20 countries. They were seized of this issue at that time. And that was preceded by some very famous scandals at that time. I mean, the Panama Papers leaks is the most recent one, but there have been many before that, starting with the LGT bank scandal in Liechtenstein, and also the UBS case, and then follows by Swiss leaks and Bahamas leaks. So there have been a series. I think the Panama Papers was one of the biggest ones. But the fiscal crisis and the need for fiscal consolidation in 2008 prompted the G20 to kind of say, listen, enough is enough, and we need to crack down on, I don't tend to use the term tax havens because that's a very old definition that the OECD did sometime in 1998, and so from our perspective, it's not really relevant anymore. But yes, the financial centers, we call them offshore financial centers, and so the problems that secrecy posed were kind of exposed. And then that's the time when the G20 said or told the OECD, listen, something needs to be done about it. We've got to end bank secrecy. And I remember the statement by the G20 leaders at the London summit, a famous statement, I go back to it many times, which said the era of bank secrecy is over. And that's what they said. And that's what we started working in the Global Forum on Transparency, which was a part of the OECD project, to bring about that transparency. That was the first pillar, that is transparency. We worked on a standard which was exchange of information on request. One country should be able to request the other country for information that they need, and that's being implemented by 139 members now. But that wasn't enough. The transparency on request is not enough. We move to the automatic exchange of information. This standard was brought about in 2014. Again, the G20 leaders have been on this agenda consistently, and they asked the OECD to develop a new standard based on FATCA, and that standard is now also endorsed or committed to by 100 members around the world. I see that as a huge, huge progress. I think a lot has happened over the last 4 or 5 years. The Panama Papers, in a sense, kind of exposed, as you say, the underbelly, but it didn't really recognize the fact, that it didn't really come as a shock to a lot of us because we've been working in this area and we know that this is going on. It was more of a shock to more of the common man. But I think what it didn't recognize was the amount of work that has already been done in this area. And if you go through some of the charts put up by the ICIJ on their websites, you will notice a couple of things which we did. One is the company formation in a lot of the financial centers is actually going down. You see the number of bearer shares are absolutely going down to negligible levels. And when we look at our own data, there are more than 60 countries that have ended bank secrecy for tax purposes over the last 4 or 5 years. And I think that is tremendous progress. And what we're excited about is that the automatic exchange of information is around the corner. The first 45 or 43 countries actually will start exchanging information this September, and the remaining 53 by 2018. And that will bring about a fundamental shift in the way governments can tackle this kind of tax evasion using offshore havens, so to speak. And in our own conversations with a lot of the traditional centers, so because we're curious what's going on and what are they thinking. But the fact is that they're rethinking their business models. They understand that this is not going to go on for too long. Transparency is one of the pillars, but the second pillar, of course, was the base erosion and profit shifting project of the OECD and G20 countries. And while transparency looked at more towards tax evasion and hiding money abroad, the base erosion and profit shifting, or BEPS for short, is looking at parking of profits in a legal manner. There are rules, there are mismatches of rules which countries had designed in a brick and mortar world, which are no longer working with the change in the way business is being done, the ease at which corporate headquarters can be changed, ease at which patents can be parked elsewhere. So the BEPS project essentially aims at not demonizing the corporations for doing what they do, but to identify that there are some mismatches and problems in domestic tax systems and aim to fix those in a coordinated manner. Because if you don't fix it in a coordinated manner, there's a risk that countries will take unilateral decisions as a reaction. They will take decisions, and that will create more problems for businesses and more uncertainty for businesses. So that's some of the background.
Okay. It's interesting that this move from exchange of information on request to automatic exchange of information. AEOI, the acronym for most of us from Madras, would read as IO, is going to be the panacea provider across governments to solving the tax. Normally, it's tempting to give the first word to the politician and then have media react, but I'm going to do the opposite. P. N. Vijay is a friend. No, I'm kidding. You've been watching this, Gretchen. Apple is a company that everybody admires globally for its innovation, but it was a little too innovative on tax as well. Post the global financial crisis, you've seen Occupy Wall Street. You just heard Monica talk about the subject has come into discussion in living rooms, cabbies, people are agitated, and you've had a change of government. What do you think is the US position on this? What can we expect from the US? And what do you think is the position that multinational corporations should take here?
Well, thank you again for having me here today. I'm really thrilled to be here and on such a distinguished panel. Let me take the second question first, which is the way I like to frame this, and I'm delighted to hear both my panelists say that things are changing, that the sands are shifting away from a dominant position by the corporations who were sort of telling the governments what they were doing and my way or the highway type of an attitude, to one in which the corporations are now a little bit under the gun to perform in a different manner. And I think the Apple case is a tremendous example of that. As you say, a very admired company, and their products are in huge demand. But I do think they have received a black eye for the taxation, for their aggressive, super aggressive approach to taxes. And of course, the many, many stories about their Irish situation, I think only just confirms that. So I think what companies need to understand is that we're in a different world post-2008, which really raises the question of fairness, as you said, Monica. And that is that many corporations argue that they are simply operating for the benefit of their shareholders, that profits are paramount, and they really aren't looking at the 360-degree stakeholder approach. And I think that this is an old view that no longer really works in the post-2008 world, when we all really started to understand that examining financial matters was crucial to our understanding of what was going on in the world. So I think corporations have had to confront an additional level of scrutiny and an additional level of criticism for the way they've been dealing with their financial matters. I think it boils down to a fairness issue. If they're going to be operating in countries, they should be willing and eager to pay the taxes in those countries. I think tax matters are a crucial element in the disparity and the widening gap between rich and poor, especially in America. I mean, Warren Buffett goes around saying, it's insane that my secretary pays more in taxes than I do. So I think it's all a part of the discussion about this real problem of rich and poor, and also of these safety nets that we were discussing earlier today in the globalization discussion. I was delighted, in fact, to hear that panel talk about how corporations do have to take more responsibility in addressing this globalization issue. It's my view they also have to take a responsibility beyond maximizing their profits and satisfying their shareholders. So take a multi-stakeholder view, your suppliers, your customers,
It's not just the owners and the directors, but their employees. And I think then the countries in which they do business would be another one of those constituents. Especially this is true in areas where the safety net is an issue and where we discussed earlier today, jobs. So crucial. If the tax revenue base is so de minimis, then the government is going to have a harder time helping to play those constructive roles. So it's my hope that the outcome of the Panama Papers, the negative headline risk that's associated with this kind of aggressive tax ploy, is that corporations should embrace the notion that they can be a force for common good. I think we don't need to call it shame, but if there is a downside for companies viewed as being too aggressive, I think that's a good thing, whether they're concealing their taxes, shifting earnings to evade taxes, or the worst case, which is facilitating money laundering. And I think that entities that don't embrace that reality are more and more likely to stand in the crosshairs, not only among their citizens, but also among their governments. So again, it's not so much, it is no longer the unrelenting pursuit of profits. I think you have to temper that with a view towards all of your constituents. I really enjoyed the speech last night by the Honorable MJ Akbar, and I think of framing it in this kind of comment. His comment was, economic growth must help those who need it the most, the poorest of the poor. And historically, corporations have just not taken up that as a task. They simply haven't had the interests of the poor or a robust safety net at heart, and they would possibly even, bridle at the idea of that. But I think that it's really a change of heart here, and I do believe that we have an opportunity, and corporations have an opportunity to take the interests of all their constituents to heart. So it does seem we're in the midst of an effort on taxation that's moving in the direction of transparency and a coordinated effort to tackle tax avoidance. And, the question, of course, is, perhaps the next question is, how does this shift then change in the world of Donald Trump?
We will come to that. We possibly may need a full seminar just to discuss the impact of Donald Trump. PN, if I may come to you, this subject is of utmost importance to India. One, we've been a victim in terms of lack of adequate capital for growth. And two, a number of Indians have contributed to the growth of the black money industry. The most conservative estimate that I have seen is putting this wealth at $440 billion. How big is the problem for India, and what needs to be done about it?
Vaidhi, it's a very huge problem. Gentlemen, awfully sorry about my throat. This morning I thought I wouldn't get a word out, but at least now. And so you would normally expect politicians to be loud-mouthed. This one is also loud-mouthed, but today not so loud-mouthed. And if I'm not able to be audible for 5 minutes, I'll keep it less. Thank you very much. As you said, I think you used a very correct word. India has been a victim of this whole thing. And if you look at it historically, what's happened in India is there's been a lot of self-goals. We had right through till 1991 an era of controls and licenses, which meant that we had high import tariffs, we had restrictions on foreign exchange, on the way people could use dollars, and so forth. So we had a huge amount of over-invoicing of imports and under-invoicing of exports, by which businessmen could stash away millions. And it's in India, a very common boy on the street will know about Swiss bank account. He would not probably know about Cyprus or Mauritius or Guernsey or Singapore, but he'll know about Swiss bank accounts. And so we had that problem. Then we had the whole political angle to it. There's a perception in India that most politicians, when they take bribes, and there is again a perception that most politicians do take bribes, stash the money away overseas. And there is the second problem of, and I was talking to Monica at lunchtime, that many of the information systems OECD is putting in place is for tax information. What about it for political information, corruption information? That's going to be a much tougher task. And then in India, another very peculiar thing is the high level of black money with normal people. You'd be surprised to know, at least some of you, that any property transaction in India above, say, $100,000 in any city of India, including definitely Mumbai, would have a large amount of cash involved in this. In fact, if you talk to a broker, he'll say 50-50 to start with. You know, it's very common. So as the economy functions, a lot of black money is getting generated. People would say it's because of high stamp duties or whatever. So a lot of that money has to be parked. And answer is, again, Mauritius, if you want the money back and put it back in your business, which is normal round tripping. If you want to put it in the stock market, it's buy a P note from one of the investment banks who are ever ready to issue you P notes. And so it comes back. And of late, one is finding, and this is a very disturbing, at least for me, that many Indian businessmen are taking citizenship outside India. If you ask, they would be citizens of Dubai or citizens of Singapore, because they believe then the heat of what the government's trying to do now will not be there or will be less. So unfortunately, while India has very nice success stories about growth rates and this, that, and as an Indian, I'm very proud of it, we do have a very big issue in tackling tax evasion, black money, and of which, of course, tax havens and transfer pricing are very usual methods. There is no magic wand for this, gentlemen. There's absolutely no magic wand. Because I personally feel, and this again makes me sad as an Indian, I've been in investment banking all my life, that these gentlemen whom Gretchen spoke so strongly against, they have the best accountancy firms to help them. These gentlemen who are transferring profits through transfer pricing or doing this, that, through, have the best legal brains to help them. The type of professional resources they can command, the Narendra Modi government cannot command. I'm telling you. And our courts are very fair, though a bit slow. So to get these things going is extremely difficult. The media will also be used in a very subtle way to make it look as if it is victimization.
Correct.
But the core issue is stashing away money and tax evasion. And I think, I'm not going to do a political spiel on this, the Modi government has taken this pretty seriously. At the stage of the manifesto in 2014, this was one of the key issues on which the elections were fought. And during 2016 alone, we have substantially modified the double taxation avoidance agreements with Mauritius, Singapore, and Cyprus in May, September, and December. And about 85% of FDI into India comes from these three geographies. Basically, we have given ourselves the right to tax capital gains. And we are imposing some very simple tests of residency. At least spend 200,000 euro to call yourself a resident. I've been to Mauritius so many times, wearing my investment banker's hat. Resident status used to be sold in the 90s for what? £1,000. You could get a nameplate company, you could get a lawyer, welcome you at the airport, putting you up free of cost, giving you directorships, giving you memorandum and articles, deal done. You know, it was that simple. So we're trying, but let me say it's not a story which is going to end with a seminar or a 2019, because it's very, very complicated and very, very pervasive. And I'm happy that External Affairs Ministry and Gateway are having something where it brings the top brains of the world together and tries, and that too in India, where I feel is the biggest problem. I'm sure as a percentage of black money to total economy, probably India is one of the highest. I don't know about Latin American countries, but India has a very high percentage. And not all of it is tax evasion by multinationals. Quite a lot of it. And transfer pricing, we are trying our best. This budget, we removed domestic transfer pricing so that we could concentrate on, and we have been a victim all through of transfer pricing. Drug companies have violated transfer pricing to transfer profits. IT companies are even doing it today to transfer taxes to themselves. Because if an IT company makes profit in India, it's of no use. What will they do with it? They'd rather, even if the taxation here is not much, they'd rather use it in their country for whatever reason. So we have, and there I think we've still got to learn a lot. Our income tax department, I think, is still in a work in progress mode. But we want to be also sure, because India needs FDI, unlike other nations. We can't at one stage, for example, the retrospective tax legislation brought in by Pranab Mukherjee killed the investment environment. For 3 years, whenever I went abroad, the only question at Davos or wherever was, what about retrospective tax? What did you do? What did you do? You know, I couldn't say I'm a BJP guy. I mean, when you go outside India, you are an Indian, right? So it is very embarrassing if we do things like that ourselves. But the point I'm making is, at least this government is trying to be a bit more focused and a bit more time-bound. And hopefully, once the information exchange system falls in place, especially with Mauritius, it's 2018, with Switzerland, it's 2019. I think with Singapore, it's on from this year. I think we will have a lot more of stuff coming out. Thank you.
Let me just share two things with you, sir. One, on the Vodafone issue, I think I would make it mandatory reading for everybody in this audience and the panel to read Article 698 of China, which was introduced in 2011. It was clarified through Bulletin 7 in 2015. Fair and square addresses what I call the Vodafone risk, the right of a sovereign to levy on assets either directly or indirectly held. I think it's mandatory reading. The beauty of it is the simplicity with which it has been written. Yes, it has been written post the India Vodafone incident, but it has been written. And the discussions there, fortunately, is not about retrospective. It is simply about the construct of the case there. The second, as a risk officer, I must highlight to you, back in the early 60s, United States ran a current account deficit and dollars were leaving. President Kennedy imposed a tax on overseas investments. But for this very reason that you pointed out, the best of legal and accounting brains are at the disposal of the corporates. The euro-dollar market happened because of that. So the dollar, which was outside the United States, was cheaper than the dollar in the United States. And London must be eternally indebted for becoming the global financial center courtesy this one move. So, as they say, every move or every tax policy change has a flip side effect, which is where the topic of this debate is, of this panel is, there is a use, there is a misuse and an abuse of it. Let me come back to the economist here. Monica spoke about trying to get countries on the same page on taxation. But all fingers are not equal. There are developed countries, there are developing countries, and there are third world countries. Countries are competing with each other to attract investment. And tax is the strongest lever that countries can have. So does that mean if countries continue to distort this, the OECD work can't progress? How do you view this as an economist?
I think I may probably take a little bit of exception with your observation that tax is the strongest lever that countries have. I would say that tax is one of the easiest levers they have, and they tend to deploy that. It is more of a low-hanging fruit, and then it also gives you the option to dish out favors and collect rents in return. So in that sense, it leads to a chain of distortions. But it is the easiest lever to pull. That's why it is being pulled. But the real lever for attracting investments, like India, for example, since you are a perennially current account deficit country and you do need to attract foreign savings, I think the real answers, which are more difficult and long duration, are about your governance, about your economic growth, and property laws and protection and repatriation, etc. Tax need not be the only lever. It has been resorted to. I would say that the hard work lies in making yourself attractive for all investments, whether it is domestic or international. If the moment a country has a set of economic policies and framework that facilitate investments, regardless of its origin, then foreign investors will come in, and tax need not be the lever to be deployed. I think that is where I feel emerging markets, emerging economies, and states within emerging economies end up in a race to the bottom with their tax levers. And actually, it also results in some sort of a subject and a principal kind of defensive relationship. Actually, today, if you look at the developed world where growth opportunities are dwindling, companies and sovereign funds do have to look for investment opportunities in other parts of the world. So they are in as much need of emerging investment opportunities as emerging economies are in needs of investment. So it can be an equal relationship. It need not be a defensive or unbalanced relationship. And therefore, the task here for policy makers in countries like India is to get out of this mindset of offering tax holidays, tax rebates, tax exemptions, etc., which are purely arbitrary, and they create this chain of distortion that keeps building up.
It's going to be a difficult one to get countries to give up trump cards. No, I'm not talking about United States. Monica, if you look at it from the other side, corporations say there is lack of coherence across countries on cross-border transactions. Corporations also say that we need visibility, we need certainty on tax rules. Does that mean we are heading to a one-size-fits-all? Would that be the only thing that can work, or can it still address issues of developed and emerging markets?
No, thank you for that question. And I think the corporations are right when they expect that there should be more certainty in the taxing systems or taxing rules. But that's not to say that we are looking at harmonization. We are not looking at harmonization of tax systems, because this is a decision which a sovereign government takes on what kind of tax system it wants. And I would say that tax is at the heart of sovereignty. So you really cannot expect that the world will come to some kind of a common position on this, while they're moving towards, I would say, more collaboration and more coherence. As I said, the problems of base erosion and profit shifting arose primarily because there was a mismatch of rules or international tax rules. And again, unlike my other panelists, I'm not demonizing the corporations here. They were just applying the rules that existed. So the onus was on the governments and themselves to fix those rules. And that's where the project on base erosion and profit shifting was about eliminating those mismatches so that the result of international tax system, which initially the purpose was there should not be double taxation, eventually it had become to a position where it became double non-taxation. The incomes were not being taxed anywhere. So the base erosion and profit shifting project was intended that countries should take steps. A, they agree on the steps that need to be taken. Secondly, they implement those steps in a coordinated manner and together so that there is certainty, in fact. If they hadn't done that, there would be so much uncertainty and there would be different countries doing what they wanted to do to address that problem. So in my view, again, the objective is not harmonization. I think it is more collaboration and coordination. And the more countries that join this process, I think that the more meaningful it becomes. Because for something to be successful at a global scale, you need countries to join in. And you did mention something about the developed countries versus developing countries versus third world countries. And I think this kind of distinction is in tax matters to some extent is not really relevant. I mean, there are some of the problems that are being faced by the developed economies are the same problems that are being faced by the developing economies. In fact, far more, the problems of tax evasion and avoidance are more acute for developing countries because of their reliance disproportionately on corporate tax revenue. And in fact, there are countries that rely on literally 2 corporations operating in their country. And if those 2 corporations are not paying their taxes, that's really a huge hit. So I would not divide things into developed versus developing versus third world, but I think the idea is that you pick up the common issues that are affecting everyone of all of those countries, and tax evasion is a problem that affects everybody. And that's the reason, I mean, in the Global Forum on Tax Transparency, we have as many as 139 countries and territories working together to implement transparency. And similarly, on the base erosion profit shifting project, there are 94 countries now working together to implement the agreed standards there. So I see going forward, even to protect the national sovereignty about their own taxes, collaboration will be required. Coordination will be required. And when you talk about the Trump card or even the U.S. Impending U.S. changes in taxation, if and when they do happen, and there are a lot of details there which we don't know yet, but there will be a platform that you need for countries to discuss that and to adapt to all of that. And again, I feel that probably the platform will be the base erosion and profit shifting project or the OECD, which will allow those conversations to happen.
Great. Gretchen, I'm going to come to you, since you have done a fair amount of insight into regulators around the world. And yesterday you made the comment that none of the regulators foresaw the financial crisis, but post-crisis, all of them were given more power. You have multinational corporations where there is difficulty anyways about jurisdiction. Now, England and Australia more recently are considering proposals where multinational corporations have to put out on the website, on the principle that sunlight is the best disinfectant, have to put out on their website their plan, their tax strategy, global tax strategy. Where will they book revenue? Where will they pay taxes? What is the principle behind it? In all the business responsibility reporting, in whatever term it's called around the world, we are not seeing tax take center stage. What do you think you need, your tribe, which, you must complement Gretchen's community of media people, because it was this international unit of investigative journalists which exposed Panama Papers. So what do you think media could do to bring this business responsibility into center space around taxation?
That's a great question. And, using the word demonization or whatever, I mean, I'm happy to be the demon in the room that wants to create an idea that I don't know, shame is a concept that has lost a lot of its power, I think, over the course of the last generation. But I still believe that it can work, and so I think the media can play an enormous role in identifying these issues and highlighting them. Certainly, the explanatory journalism that takes place when you have to unravel these very complex tax situations, I think, is a service to mankind. And bringing it down to the level, as you say, Monica, of the taxi driver or the woman and man on the street, I think is crucial. There is a level, I think, of migo. We say in the United States, my eyes glaze over, when people start talking about finance. And so, the education of the populace could not be more important on these issues. So the media has a very tough job to do. It's difficult to explain. It's difficult to get the information. There is a lot of secrecy still surrounding this, but we do have our marching orders, I think. Unfortunately, the media business has been completely upended by the internet, and so we do not have the investigative resources. We don't have the resources to get toward investigative reporting on some of these issues, and so you're going to really have to see a commitment from those entities that do have the resources to really put towards these issues instead of writing about Kim Kardashian and her husband and what their children's names are. So I think that's a real issue that my business has to deal with, because otherwise, if this is all shrouded in secrecy, then we will all be the worse off for it. But it's a very difficult moment in time because of the economics of the newspaper business, of the media business right now.
Okay.
One minute, I have to respond.
Sure.
Thank you. No, I think the point that Monica made about demonization, I don't think this is an Oxfam forum. This is a Gateway House forum. So, so the idea is not to demonize companies. They are doing what in their interest of maximizing shareholder value. That is what academic economists told them to do. So they're doing that. I think, and more also, we know that all their tax avoidance mechanisms are acting within the letter of the law, but not the spirit of law. So in that sense, it is the failing on the part of the governments who facilitate this. And as she said, media has to do its job of highlighting and shining light on these practices. But corporations are doing what they're supposed to do. So there's no need to demonize them. It is just that the other players in this game have to get their act together and do what they have to be doing.
Okay. The best way to bring the politician in here. The foreign secretary, and you missed the opening session, PN, the foreign secretary said, don't demonize Trump, analyze Trump. And the analyst in me tells me that he is likely to play with tax rates, especially corporate tax rates, to encourage US corporations to book more revenue and profits in the United States. You're an ex-markets person. What would that do to capital receiving countries like India? What are the levers you would have to counter? Because that's a risk that you need to factor.
Yeah, Vaidhi. It's obviously a risk. Anything that Trump does to either through mildly coercive tactics or through fiscal measures to get American money back to the US and implicitly out of India is bad news for India, for jobs and for so on. But as Professor Nagendran was saying, I also believe that tax is not the prime reason to drive investments. And I think the way our government looks at it is that the ease of doing business in India, we are still ranking very, very low. We have come up about 10 or 12, but Russia has come up so much more. We are still in 130 or 140. And if we can work on that, I also agree with you that demonizing corporations, we have to live with the guys. They've got the money, but we have to recognize they're very smart guys. So, they are what they are. That's their DNA, not to pay taxes anywhere. Otherwise, they won't be multinationals, right? So, I think rather than take Trump on headlong and do something quid pro quo or something, which even our geopolitical interests would not make us do, would be to work extra hard on things like resolution of disputes, on ease of starting a business, on transparency. These are the issues I think I can tell you for multinationals, these mean a lot. They know India, the success story of most of the multinationals in India, whether it's a Colgate or a Hindustan Lever or anybody else, they know that in India you can make money. So they know that in India we are very smart guys, graduates who can work for you. When they know that there's a huge market out there, aspiring, dying to consume. All the Lego pieces are in place. But they get very sick dealing with the system. Because they have every quarter to report to their boards what's their earnings. So they get bored or fed up with India. If we work on that, even if we stop the Mauritius route, even if we stop the Singapore route, but make India not Singapore, at least half of Singapore, then I don't see a threat to investments. It is our own, only thing we can say is the same thing for Indians also. If you and I want to start a business, we will also have to face the UP State Electricity Board and get a power connection, whatever that means. It's there, but we have to work on it. I don't think removing Mauritius or exchanging some people, round-tripping guys may be affected, but the genuine foreign investors would still come to India.
Okay, great. If I have time, I'm going to take one more question to Monica and then move to the audience. Elvira, do you have questions or they are enjoying their siesta? Okay. Monica, the OECD through the BEPS project has taken the lead and is doing an outstanding work. Do you think this is the proper multilateral body to lead this? Will it recognize interests of countries beyond OECD, G20? What are you doing about it? The other concern expressed about the OECD project is its very northern hemisphere bias, because there is a feeling that southern hemisphere, which is more natural resources driven, and the tax policy should be different for it. It doesn't quite get that. So just walk us through how you think OECD BEPS project is the proper platform to drive this.
Okay, there's one way of looking at it. I guess, in an ideal world, you would have all the countries come together, all, 190, whatever, and they would sit around and decide and take decisions on tax matters. And it's possible, but it hasn't happened so far. It hasn't really happened, and there's a reason for that. What the OECD had done was that it seized the opportunity and the political momentum that was there. It brings together a group of very powerful countries, yes, rich countries, and very powerful ones, but it had the backing of the G20, again, some of the strongest players in the world, which gave them the mandate to work on certain issues. It started with transparency, which was in 2008 at the Prime, this issue. But as I said before, this is an issue which affects everyone. It just doesn't affect the rich countries. It affects everybody, and the same for tax avoidance. Whether you are in the southern hemisphere and dependent upon natural resources, and as I said, if you're dependent upon natural resources, you probably have 3 or 4 firms operating and misusing the transfer pricing regulations, which may be even non-existent in some of those countries. They may not have proper transfer pricing regulations, or they may be misusing it, or there's misuse, the lack of capacity when you have a battery of lawyers, with the multinationals and tackling with, tax administrations Mr. Vijay spoke about the Indian tax administrations, but which is, I think, in a much better position, having been from I belong to the Indian tax department, so I know the limitations, but I know the strengths as well. But there are many other countries out there which don't have that strength. So coming back to it, there's a group of countries, powerful countries, that decide to work on certain issues. And the key there is that there is political momentum behind it, and you don't want to lose that political momentum. And that is why the OECD's G20's BEPS project had a very ambitious timeline. It had a timeline of 2 years, and same for automatic exchange of information. The timelines were very sharp, and I know at the OECD we've worked 16 hours a day because of these crazy timelines. But the idea was that we don't want the political momentum to be lost. We want to have the gains. And this was not to the disadvantage of other countries who were not part of the process at that time. But as soon as the basic pieces were in place, they were part of the process. They're part of the process. As I said, the BEPS project now has 94 countries, and they're all on the equal footing. They're all equal members. The Global Forum has 139 and counting. They're all equal members. They all have one vote. All the decision is done by consensus principle. So the issues, and I was in the Indian tax administration, and I can bring that perspective that it was much harder to get information when India was acting alone. 6 years ago or 7 years ago, try getting an automatic exchange agreement with Switzerland. Sorry, it's not going to happen. But this momentum, this push that is there, the global push that is there, has benefited developing countries in a manner that wouldn't have happened otherwise. Could there be another body? Yes, of course. I think all efforts in improving the international tax system are welcome, and they should happen. But again, two things are important. One is they shouldn't be working at cross purposes with each other.
Collaborative.
They should be collaborating, and also there shouldn't be multiplicity of standards. You should be moving, because that's fatal for businesses. If there are different standards, if there's uncertainty, they don't know what to do. I think that all efforts towards bringing on board developing countries are absolutely welcome, and I think OECD is very much partnering with developing countries. And it also helps to have them at the table. They're definitely not the menus, so to speak, which is a very famous saying by the NGOs, but they're definitely at the table, and they are contributing to the amount that their capacity is. They have capacity issues as well. And so I think the model that the OECD G20 have followed is really a successful model. It has worked for transparency. It is working for BEPS and for any other issues that come up.
Quick comment.
I just want to ask Monica, yes, OECD grabbed the opportunity and done tremendous work. As you said, trying to get something out of Switzerland on your own would be impossible. But now, don't you think it's time that something like the WTO, which is a much bigger organization and looks at trade, tariffs, and investments under it, that's the natural place to whom the patent should be handed over?
As I said, the work is going on at the OECD. The work is going on in a very large...
Saying that WTO doesn't do any work?
No, I'm not saying that at all. I'm not saying the WTO doesn't do work. And if there is to emerge a certain body which can handle this work better, absolutely, they can work on this. I remember when I was asked many times about the transparency work and why the UN doesn't do this work. And
I did say UN.
I will relate with that. And then I was asked why the UN doesn't do this work. And I had the UN person sitting next to me on a panel, and I said, why didn't you ask them? And so they asked the UN representatives, and they said, firstly, we think the Global Forum is doing a great job. And secondly, we don't have the capacity and we don't have the resources to do it. So why try to take away something which is already doing well? And yes, there is scope for other initiatives, absolutely. I'm not saying they're not. But definitely, what work is going on, we should at least push that and aspire for more.
As they say, if not broke, why fix? But just on the point, United Nations in its first 15 to 20 years actually focused a lot on taxation matters till other bodies came in. But I guess the mischief makers would come in if the final saying that they make hurts a few powerful countries. Then the voices will shift and they will want to have alternate bodies to do that. Elvira, we are coming over to you.
Thank you. I'm going to take the liberty of pooling a few questions. We've heard some fascinating exchanges here, and many of the questions have touched upon these. You've described the various considerations here, developing country versus non-developing country, extraterritoriality you've touched on, and regime shopping, the risk of that and whether or not that will increase in the future. And you've also described a great deal of momentum around the positive sides here, the harmonization efforts, transparency and information exchange. Some of these questions are alluding to what happens in the now, these winds of change in this new era of globalization that we're seeing. Really, what do you see ahead, even with all these considerations, given that globalization and the new environment for countries and some of these issues like regime shopping may come into fashion again? Just a bit of a prediction and outlook. And one delegate has put it quite interestingly and said, you know, what is the risk when we have the leader of the free world setting an example?
Can't hear you clearly.
Sorry.
The second question.
The second question is, by one delegate, what is the risk of the leader of the free world not sharing his own taxes? What example does that set?
Can you repeat the second question, please? Okay, the second question, there is only one person on this panel who is democratically elected to answer. So let's get to that first.
Okay. Well,
By this panel.
yes,
And
I
have
certainly,
the-
certainly am very interested in that question. I anticipated that question. You have to overlay everything. There are so many, he's such a conundrum. We really do not understand. We only just now have a Treasury Secretary who was confirmed yesterday. So he will be running the IRS. He will be rewriting the tax code, according to the New York Times today. So what exactly that means, we don't yet know. But yes, you do have to overlay all of this with the notion that what we do know about Donald Trump's taxes is that he didn't pay any for quite a long time, possibly decades, because of the tax loss carry-forwards that he had from the failure of his businesses. So it's an interesting concept that the President of the United States has these elements at work, but I call him the disruptor in chief, so it's very hard to understand what he's going to want to disrupt about the tax code. I think he has made noise about a tax holiday. The question to me would be, what strings, if any, will he attach to a tax holiday to repatriate all those trillions of dollars that are sitting overseas? Would there be a jobs component? Would there be a building of plants component? Those are questions. But I think the other interesting aspect of some of what he's said that does play into this is he does seem to, I mean, he's very pro-business, we know that. He's a real estate developer, so we know that he understands the tax code and uses it. But he also seems to make noise about companies that are possibly abusing the taxpayers. So when he yells about Boeing charging too much for the next Air Force One or other defense contractors possibly ripping off taxpayers, that's a kind of an interesting different point of view that he seems to take towards business. So it's hard to predict, but I think, yes, you do have to assume that he's a sophisticated person in the tax realm, and just don't know what the Treasury Department is going to want to put forward.
Do you want to take the first question? Yeah.
On the first question, which was like what's next and what more needs to be done, I think even though we've talked about a lot of progress that has happened over the last 5-6 years, I think there's still, a lot more to do there. I think the first important thing is that implementation is now key. We had the BEPS project, we have countries coming on board, but now it's implementation, and to make sure that this goes through. And that's also true about automatic exchange of information, where we do have commitments, but the first lot of information exchange is supposed to be happening in September 2017, and the second lot in September 2018. And that is something which we are focused very much on, that countries deliver on their commitments, and that's going to be really important. I think the third aspect, which was revealed by the Panama Papers again, was the question of beneficial ownership and knowing who the person or the warm body at the end of the chain of companies is. There's a lot of work that's going on now. The Global Forum has included it already, even before the Panama Papers in its standards. The automatic exchange standard also requires the banks and financial institutions to go beyond a corporate account holder and find out who the real person behind there is. But there are huge challenges there in implementing it. You know, there's the customer due diligence requirements and all of that. So we are watching that area carefully, because that's, as I said, it took 5 or 6 years for bank secrecy to end. You know, it was the effort, and it was the, you know, rating of countries as non-compliant, and then changing laws and coming back. But I think the frontier is beneficial ownership and its implementation, proper implementation, and that will take our time over the next couple of years, unless, you know, something just comes from the side and upends everything that is being done. But that's what we're focusing on.
Before I get Anand to comment from an Indian perspective, I do want to highlight, again, given my day job as Chief Risk Officer, I do want to highlight to you that when you go from tax to this entire layering concept, a number of countries have made it their national business model to support layering, right? So it is when you hurt that national interest, the true test of how much they're willing to collaborate on the solution will come about.
No, I think I would like to answer this question of what next from the Indian angle. We have done demonetization. We don't have to do demonization. So I think, you know, there's no need to set up a needless class war in this country. As Mr. Vijay put it, in the ease of doing business ranking, there's something called payment of taxes. And there, you know, the official tax rate for India, not just the income tax, it considers all the taxes that are paid by a mid-sized company, not a large company. It is 60.6%. And out of the 190 odd countries, only 10 or 12 countries have a ratio of tax rate of more than 60%. It includes payroll taxes, it includes income tax, sales tax, all kinds of taxes that you pay. So there is work to be done in this area. And once you also are able to convert a lot of informal firms into formal entities, and the tax base rises, then the reliance on corporations to pay their taxes will reduce, and you can also remove some of the exemptions you have given them and bring down the tax rates and simplify the whole thing. So that is the next step that awaits countries like India.
Sure. PN?
Yeah. I think the way ahead is so full of opportunities and so full of minefields. Again, that could be a session by itself. See, I agree with Nagan that we need to do a lot more to simplify things here. Hopefully, the GST will simplify a lot of indirect taxes, but we still have a lot of way to go on exemptions and interpretations, and that puts off people, actually. They're not wanting to evade tax, but they just can't deal with the system. Sometimes they overfly the country. This is a serious challenge to the government to tackle. And I hope this NDA government will tackle it because we need to do that very badly if we have to be a preferred destination. The second thing about India that sometimes worries me, and that got highlighted during this demonetization issue, was there was a lack of sensitivity about the moral issue associated with demonetization. I think it's important that we as communicators and the media should at some level take the moral dimension. Even when tax cases are reported in India, the general tendency is to talk about some multinational company being harassed, being searched, being raided, and the tendency is to put the taxman as some sort of a bad man. You know, I think this media management by multinationals will always be very strong because not only do they have the best lawyers, the best accountants, but they also
PR
have the
firms.
best communication
PR
agencies. Yes, so money can do a lot. So it's a challenge, and I felt it personally because demonetization, I think, is a little bit is part of this. So I'm not overstepping the contours of the debate. That to bring people to feel that the cause was very noble. If we could take even baby steps to remove black money from our system and get people to pay taxes, that's a very, very big thing. To get that idea across with our anchors, with our papers, was extremely difficult. All that they could talk was in the ATMs, there was no cash or this thing. I mean, there were genuine problems. But that I think we are on to a very big thing, I think. Removal of black money through tax havens or Swiss accounts is a very, very big thing for India. It can lead India into a different zone. And I think some amount of awareness creation by everyone would help.
Again, in keeping with my duty as Chief Risk Officer, if I can bring to the table two issues, unsolicited, but I would request you to carry that back to the government. One is better bulletproofing India, especially in the regime of automatic exchange of information. At a point where it comes to hurt, the pushback will be India does not have data protection rules, India does not have security features, India does not have measures on privacy and confidentiality of data. A fair amount of work has been done, but this will be the pushback that you need to be cognizant about. The second thing that I would put down as a risk factor is between white and black is a color called gray. I'm not preaching 50 shades of gray, but what I am talking about is gray money. As India grows and it starts attracting people back to India, you will get into the zone of people having two domiciles for tax. And how we handle that, one of the things that the United States did in its ruling of 2010 or 11 is we have the right to seize all of those global assets. And there would always be, like you said, just as the multinational, the returning Indian is also a darling of the media and therefore will make this as tax terrorism in another form. Elvira.
Thank you. Actually, there's a sort of a follow-up question from the audience from Sandra Iyer.
Could you speak up, please?
Yes. There's a follow-up question for Vijay, Mr. Vijay, from Sandra Iyer of TISS, related to demonetization. So what are the challenges in addressing money trapped abroad? We had demonetization at the national level, she says. What's likely to happen next?
Well, I think next is putting the lens on Benami property. That's obviously another very Benami property. For those who don't know, the word is holding property in proxy. It was discovered that a security officer of a local politician in Lucknow in UP put in 100 crores. He was living in a slum, but he went and put in 100 crores into his bank account, which obviously doesn't need any further explanation. So a lot of assets are unfortunately held by politicians and businessmen in other names. So it's going to be a big challenge for us to get after that. And I think, to be honest, we did try in 2016 a scheme for foreigners to get foreign money back. Frankly, and this may not be the view of the government, I think we didn't do it well. We could have done it a lot better. It is possible that now that we are armed with information exchange, which my friend Monica through OECD has brought in, there could be a sea change, and people will really genuinely start feeling that unless they comply, and so probably in 2018, it's just a suggestion, we could come up with a refurbished amnesty scheme to get the money back. So, but it's an evolving thing. Actually, it's a thief and police game, actually. Because every time our problem is, these are the people to whom we have to go and ask for investment. We cannot build all our infrastructure. You know the infrastructure problem. There's not enough capital in this country. And if we go and tell them you're tax terrorists, or you're this, that, they'll say thank you. Nobody will even try to work in India. They'll say we'll get arrested or something. And India has this reputation of being pretty nasty. So perception issue, investment issue, all that's going to, I hope we do it the right way.
Thank you. Listen, I can't take any more questions because your boss here has just told me end of time, end of play. So, but before I let go, you managed to protect your voice exceptionally well. Can we have a special applause for that? But the breadth and the depth of the panelists that we had has just been phenomenal. So a big round of applause for this panel, please. And I hope you enjoyed it as much as we enjoyed discussing this subject. Thank you so much.
Ladies and gentlemen, we'll now break for coffee until 3:30 before the next session.